Welcome, Alex. How are you doing, Alex?
I'm doing good, Craig. Thank you for having me.
And before we get started, why don't you tell us a little bit about your background and about Equivesto?
I'm one of the managing directors and co-founders of Equivesto. I have about 5 years experience in corporate and commercial banking from Scotiabank and also some work experience in venture capital and private equity. And Equivesto is a new equity crowdfunding platform. So essentially, Equivesto lets you raise capital from your community and the general public up to $1.5 million here in Ontario. And it lets those people invest directly in your company starting with only $100. So
And
that's
it
what we do.
and traditionally, like one of the first things that people ask me is, where do I get funding? And uh, VC funding is extremely rare, and angel investor is just slightly more common. And people need to understand that there is a bunch of different funding options: grants, loans, tax credits, friends and family round, loans, accelerator programs, programs from Futurepreneur, and that equity crowdfunding is something that is exploding these days, and doesn't rely on VC investment and single person to say yes or no, but relies on your community and your crowd and your value proposition to your marketplace.
Yeah, it really changes the conversation. Instead of going out to a limited number of people who have, hundreds of thousands of dollars and trying to convince them that you deserve that money compared to everyone else, and they're always looking for the way to maximize the return on that investment primarily. With equity crowdfunding, because the minimum investment is only $100, it's a really different conversation because even though $100 isn't nothing, almost everyone could have potentially $100 to put towards a variety of different ideas that they care about and that they want to support. So it changes it from a sort of scarcity mindset to one of more opportunity and accessibility.
Yeah, and I think we've all wanted to either Dragon's Den or Shark Tank, depending on which one of these types of or general pitch competition. We've all wanted to invest in in some companies we've seen and not been able to. So I like the concept of us being now able to potentially invest in these companies that are having the impact or are doing the things we want to help them with do.
Exactly. It basically allows investors to act like mini dragons or sharks on those shows. It allows you to experience investing in exciting private companies like startups without needing to have that massive amount of capital that was traditionally required to participate. So it's really a win-win from both sides.
So we're going to get started with your presentation, and I'm going to throw it over to you. But before we do, I just want to mention everyone who's here and in the chat room. We want to answer your questions. I'm sure you have a lot of questions about equity crowdfunding and how to run a campaign and generally around this stuff. So feel free when the questions come to you, throw them in the Q&A room, throw them in the chat room. Alex and I will get to them at the end of his presentation. So we will get to your questions, and we want all of them. But we're gonna kind of flow through the presentation because some of them will be answered along the way. But definitely give us your questions, and we want the end part to be as interactive as possible. If you leave with unanswered questions, we feel like we haven't done our job. So over to you, Alex.
Perfect. Thanks, Craig. So how do I have a successful equity crowdfunding campaign? There are several key factors to a successful equity crowdfunding campaign, and the five main ones are your why, your impact, your community, your model, and your potential. And we'll talk about those five in detail in this presentation. We'll also talk about some other key areas to think about, which include the timing of your campaign, your community, engaging that community, building your campaign planning, working on your page and your pitch video, and working on your company valuation. Some key details to note are that, and something that many people don't necessarily realize, is that successful equity crowdfunding campaigns, if we look internationally, about 70% of the investors actually come and are attracted by the company that are raising the funds, and only about 30% of the investors are attracted by the equity crowdfunding platform itself. So just like what you imagine with Kickstarter, most people aren't signing on to Kickstarter necessarily looking for exciting things to support or back. They're usually doing their own thing, and then they hear about a company that's doing something exciting, and then they want to put their money behind that, and the avenue to do that is, you know, Kickstarter or equity crowdfunding. So it's important for companies to understand that while the portals will work hard to get your campaign funded, traditionally in rounds that are successful, a lot of the investors are coming from the companies and their communities and that interest as well. So it's important to keep that in mind. If you think about an average investment as part of an equity crowdfunding round, which is between $500 and $700, and you're looking to raise, you know, $500,000 to $700,000, you're probably going to need about 1,000 investors. So with that in mind, if you're thinking about, okay, 1,000 investors are people I need to attract to my business, probably 70% of them are people who I want to activate from my own community. You can use that as a bit of a benchmark when trying to grow your community to see what kind of engagement and interest you're getting before even running a campaign. So your why. Equity crowdfunding is not like traditional capital raising, but one way that they are similar is your story and the passion that drives your business can really make a difference. I know when we talk about venture capitalists, it often can get focused on the numbers and, you know, potential returns and growth. But whether you're going to a small select number of individuals or your larger community, your why and the passion behind your story and why you're making your business really can sell people and get them excited to get engaged, regardless of the size of the investor. So it's really important to think about having passion relating to your business, which I'm sure you do, because it's hard work being an entrepreneur, and to get this far, you usually care about what you're doing. And what are the problems you're solving? How are you helping? And why does your business really matter in terms of, you know, that sort of connection and the passion behind it? And you want to make sure you're building your story as part of that. So you're thinking about why you got into the business and how it's really driving and what your business is doing to really solve problems. And you want to try to crystallize and perfect that story, not making anything up, but really understanding the best ways to sort of frame yourself and prepare to talk about that. The next would be your impact. So your impact is really about taking your story and all of that passion, that effort, and seeing what sort of amazing things that's going to translate into. So you are going to really attract investors by talking about the breadth of your impact, both from sort of positive change in the world, either locally or internationally, and the positive impact from a non-financial perspective, and also the potential for company growth and returns. So really crystallizing what your sort of growth plans are, what it's really going to look like when your company gets much bigger and is more successful, but also talking about and being really aware of the great things your business is doing and how that's helping to change the world for a better place. Your impact and your why tie nicely together to really build out the whole story and persona of your brand, and having strong story and impact tied to your brand can really make a big difference when attracting people and getting them excited about what you're doing. Next is your community. So obviously with equity crowdfunding, as I mentioned, you're attracting a larger number of investors from the greater public. So it's really important to have a strong community beforehand. You know, I'll talk about this a lot more next week, but your community is really a critical part of having a strong equity crowdfunding campaign, with 70% of the investors generally coming from the company themselves. So making sure that you're speaking your community's language, making sure that your community is growing and attracting more individuals, and getting them excited to participate is really important. Something that is not often known, and you're probably not aware of, is that there are actually limits and restrictions around running paid advertising for equity crowdfunding. So to talk about that in a bit more detail, if you're going to make a post on your website, Craig, if you wouldn't mind, yeah, thank you. If you're going to make a post on your website or on your social media about your campaign, and it's just a post, it's not a paid or a promoted post, you can mention that you're running an equity crowdfunding campaign. However, if you're actually doing a paid post or a paid ad, you can't talk about equity crowdfunding at all. You can only talk about your business and what you're doing and just general sort of brand awareness marketing. And so when it comes to building that initial community of followers, building that email list, building that network, it's important to try to do that as much as possible beforehand and just on the basis of your impact and your why. Because we can't go out and run ads to the general public saying, you know, here's a great company, you can invest in it right now, their deal's fantastic, you should do it. You can't do anything like that. So what you can do is attract people to what you're doing because what you're doing is exciting and excellent. And then once they're part of your community, then you can notify them that you're running an equity crowdfunding campaign and direct them to the page. The next area is your model, and then the fifth one is your potential, and I'll talk about them both now. So in addition to the community and the impact and the excitement surrounding what your business is doing and how you're engaging people, of course, it's also important to have really well thought out your business plan, how you plan to make money, your expansion and go-to-market strategy, and the potential return for the investors. A really different part of equity crowdfunding compared to a traditional Kickstarter is because the individuals who are participating are investors, they're looking to see and they have access to potential returns from your company's growth. So it's really critical to have well thought out and well crystallized your business model, your growth plans, and how those growth plans will translate into returns for these investors. Just like when speaking to angel or VCs traditionally, you want to have thought about potential exits, clear growth goals that are targeted, you want detailed financial projections, and you want to make sure that your business plan and business model can stand up to scrutiny. But also, you really want to paint a bit of a picture connecting with your impact and your why about the exciting future that you want to create, both financially and just through social impact regarding your business and what it's doing. But of course, when presenting any numbers like this, it's really important to back them up with data. That's one of the things that whenever I talk to a company, I always put that at the forefront. If you're preparing growth projections or financial projections, you want to make sure that you've got data, you've got sources, you've got references that can back up some of those assumptions that you're making. You think your company's going to be able to grow at 250% each year? Why do you think that? Okay, it's because of X, Y, and Z, and you've got a study and that sort of stuff. That really helps to support the numbers you're providing and give people confidence in what you're saying. So now that we've talked about the 5 critical items, there's some other areas that are really important to discuss as well. So one of the most important things is campaign timing. So equity crowdfunding campaigns in Canada are limited to a maximum of 90 days. But not every single day during the campaign is equal. There's actually a huge importance placed on the initial first week, week and a half to 2 weeks of the campaign to really prove out and demonstrate traction and success immediately at that stage. If someone logs on to see your campaign and you're in the second month and you're only 15% funded, even though there are rules and controls in place to protect investors where they will get a refund if your campaign doesn't reach its minimum fundraising goal, there's still that emotional impact of seeing the company not being close to its goal and a lot of the time having elapsed in the campaign. So captivating and activating your initial sort of inner community during that first 2 weeks is very critical. So preparing them beforehand, which, again, I'll talk about more next week, but preparing that community beforehand so that the moment your campaign goes live, you're able to get that initial great traction and get, 20%, if possible, of your goal within those first couple weeks really acts as a great signal and demonstration to other investors who might be interested but want to see some traction or really expansion before they participate. So getting people involved and signed up and participating within those first 2 weeks is very important. In terms of the total length of a campaign, the sweet spot for success is really 2 months. You want to see your campaign getting close to hitting its target by that 2-month period. Otherwise, there's a bit of a worry that you'll be able to maintain the momentum for that last month to hit the goal. Oftentimes companies will hit their goal by the sort of 2-month period, and then they'll overfund for the remaining month. So just get additional capital for that remaining period. The campaign, it's really important to maintain and engage people entirely during the campaign, and I will talk about that on the next slide. So how do you get people to come and see your campaign while it's running? You've put it up on a portal, and the portal is going to post about it and everything, but it's important to reach out to your broader community frequently to let them know that you're running this campaign, it's for a limited time, and this is really an exciting opportunity for them to participate. So before even starting your campaign, it's important to have prepared and planned out many social media posts throughout the duration of your campaign relating to milestones related to the campaign itself. So we just hit X number of investors, or we just hit 20% funded, or different things like that, but also posting about exciting milestones you've hit in the past and about the great things that your company is doing. You also want to make sure that you are indicating to your community and you're teaching them how you want them to interact with you. If individuals are commenting on posts that you've made and you don't respond to them for 3 or 4 days, you're teaching those people, those commenters, that you're not interested in their comments and you don't really want them to be active and quickly engage with your posts. If someone comments and you comment back and you like their comment and everything within a few minutes or a few hours, you're helping to indicate to your community that that's the kind of close engagement that you want to have with them. So building up to the campaign, that's important, but certainly during the campaign, it's really important to have that really targeted, consistent engagement with the community for the duration of the campaign. As I mentioned already, there's limits on paid advertising for equity crowdfunding. So really getting the existing community members excited about what you're doing and treating them really well will help those people convert into investors much better. I can speak about Equivesto exclusively at this point, but Equivesto works closely with companies to align our marketing posts and yours to effectively work together and broaden the reach of your campaign. So while the campaign is running, we're both working together in tandem to both activate our community and your community, as well as the broader community who might be interested in an offering like yours. Another great way to engage the community during your campaign is to create additional specific and special content that brings them in more and also promotes key things like your why and your impact. So an interview with the CEO and other sort of fun quizzes or engaging content like that posted during the campaign helps get people interested in what's going on and gives them more information and more incentive to participate. The campaign itself. So the campaign is run from a campaign page, which is hosted on a portal. That's the only location that you can actually post financial details or structuring details about your equity crowdfunding offering itself. You can't post about that on your own website, though you can create a link or a sort of paragraph letting people know you're running crowdfunding and directing them to the portal. The actual details of the campaign all are on the single campaign page. Because it's all in this one area, it's extremely important to use the right language for your community and make sure that this page is sort of perfected so that when someone does land on this page, everything there is working harmoniously to convince people to participate in your campaign. So using the right language that fits your community to talk to them about what you're doing, being clear and concise with your language, outlining the benefits for your company and creating clear, different paragraphs about different topics related to your company and your offer is very important. You want to outline clearly your growth goals and some of the potential returns tied to your financial projections. You want to outline the detailed reasons for the raise, why it makes a big difference, and how that can really help catapult you to the next stage of your business. And you also want to talk about, and this is very important, some of the risks associated with your business. Portals operating equity crowdfunding and allowing equity crowdfunding are restricted by the Ontario Securities Commission and have to provide to investors a fair and honest description and presentation of each business offered for investment. And so part of that involves being clear and upfront about some of the risks pertaining to your business. So think about what those might be and prepare them so that people can review and understand them clearly, but you can also provide additional information as to why you are dealing with those risks and why the investment is still worthwhile. Another great thing to do is to create strong video content for the campaign page. Video is so much more effective at captivating individuals than just images and text. And so creating a concise pitch video for individuals on the page and a demo video of your product go a long way to get them to click that invest button. Speaking of a pitch video, what are some of the things that you should have and include in a great pitch video? First of all, it should be short and clear, about 5 minutes total. You should have the founder or a key team member do the talking and presenting, someone who's directly connected to the why and the potential impact of the business. That person is, as I mentioned, the great person to actually demonstrate the passion and why for the business, and they should be really emphasizing and talking about that a lot in the video. With video content, it's so much easier to see the emotion on your face, to get that engagement, and so really making sure that that comes across is huge in terms of having a successful campaign. And you also want to make sure in the video you can outline the reasons and the use of the funds and why that's really going to help make a big difference. If you need that $200,000 to launch your great product that's going to help save polar bears in the Arctic, you want to make sure people know that in your video. And finally, why are you exciting and worth supporting? You really want to use the video as an opportunity to present key information about your business, but do it while still showing the excitement, the passion, and the drive behind you and your team and why you're really the best people to be doing this. Another critical part of a successful round is your valuation and having a fair valuation. At the end of the day, even though you're doing all this marketing and you're talking about your why, this is an investment that people are considering. And so they're going to think about what they're investing and what they're getting in exchange for that. And the starting point to determine that balance is the valuation of your company. So it's important to make sure you set a fair and reasonable valuation. If you work with Equivesto, we help our companies to actually understand what a reasonable valuation would be for each of them and to give them some advice and direction around picking that fair valuation. Having the right valuation really can incentivize investors to participate. If they feel like the company is valued fairly and they're getting a good deal because there's a lot of opportunity in the future, they're definitely going to want to participate. Also, you want to make sure that you can leave space in your valuation for your company to grow and increase value over time. If you push hard and go for a higher valuation now because it sounds more prestigious and it feels good as a founder to have a great valuation, you can end up hurting yourself in the future if you're not able to have strong enough growth between this funding round and a potential future one. You might not be able to have that increase in valuation between the two that you're hoping for. So oftentimes, even though you might want a higher valuation initially, it makes more sense to have a fair, realistic, or even a little bit towards undervalued valuation so that you can clearly indicate that growth and increase in performance quickly after the investors have participated. That will also help them feel good about the decision they made to invest in your company. At the same time, though, it's important that founders are treated fairly and respected for the work, effort, and time that's put in so far. When doing equity crowdfunding, as opposed to venture capital investing, with a venture capital company, if the valuation is lower, that company immediately gets more control of your business. And so it's a little bit of a zero-sum game. The lower your valuation, the better it is for the venture capitalist who is participating. With equity crowdfunding, the portal is a bit of a friendly third party. We're working on behalf of both you and the investors. And so we want to make sure that your valuation isn't too high, but also your valuation isn't ridiculously low and unfair to you as the founders. Your valuation directly connects to the amount and percent of shares that are needed to be issued to raise capital. If your valuation, and when valuations are calculated, we're talking about a post-money valuation, or the valuation assuming you have the money that you're looking to raise. When you look at that valuation and you compare that with the amount of money you're trying to raise, if your valuation is 3 million and you need to raise 1 million, it's very clear that you need to offer 33.333% of your company in exchange for that $1 million. So figuring out the valuation tied with understanding exactly what amount of money you need and why you need it helps determine what the structure of the deal is going to be and the price per share and the number of shares that will be offered to the investors. So getting that valuation right at the beginning is a really important step. Prepping for your round. There's a lot of important things that we've talked about that you can do to have a successful equity crowdfunding round during your round and just before, but there's even more work that needs to be done before your round starts to really make sure that you're ready to go and your round will be successful. I would say probably 60% or maybe more of the work related to equity crowdfunding actually takes place before your round even starts. And it really comes down to preparing the right documents, activating your community, and making sure to leave adequate time to get prepared and plan out your campaign before you're trying to run it. Next session, we'll be talking about all the different prep that you can do to have a successful campaign and what you need to do to get ready. But you can also look on our website, equivesto.com/learn, where we have templates of documents that you'll need to prepare and a lot more information about how you can sort of get ready. But definitely a lot of the work involved actually comes before the campaign starts. So make sure you do your research and think about what's involved with that before starting to aim to have your campaign. That is the end of my presentation. Thank you all very much for listening, and I'm excited to answer your questions.
Well, that was great, Alex. I really appreciate it. I have some interesting some questions, and I just want to encourage everyone else to throw their questions in the chat room or in the question and answer room, so that we can discuss them. So,
Sounds great.
quickly on fair valuation,
Yeah.
is there a method you use or prefer?
Yes. So we usually use a variation of what's called the first Chicago method. But essentially, um, and first Chicago is a little bit complicated. You can look it up if you want. But basically, what we do is we look at your annual 5-year financial projections for the company. We look at all the potential revenue that you've outlined for the next 5 years, all the expenses, all of the details there. And we actually calculate in terms of the annual profits, what that's going to look like for the business over the next 5 years. And then we discount those annual profits back to today based on the amount of risk and the likelihood that we think the business will actually be able to go through and achieve these projections. And because it's a startup, we discount that pretty heavily. And so, if you're saying, oh, we're going to make 500 million in revenue in year 5, we're going to, be aware that the likelihood of that isn't necessarily as high as we might like. And so we discount the cash flows or the profits from the business back to today. And then with the first Chicago method, we actually do that 3 different times with 3 different sets of projections. The first set of projections is the sort of best case scenario projections. The middle set is the sort of, realistic, what we're sort of expecting. And the third is a sort of worst case scenario projections. And then once we have the value of the company in all 3 scenarios, we actually look at which of the 3 scenarios is most likely and the ratios of the likeliness of each of those scenarios, and then come up with a number at that point. But we also look at things beyond just the projections. We look at the team and the capability of the team to do it. We look at the product market fit. We look at the market's willingness to accept this. We look at sort of international and local business factors. It's quite comprehensive, and it's not just the financial projections, but they do play a part in that for sure.
And I just put a link in the chat room to the video we did with what is your company worth, so that you talk about some of these things in detail. So if people want to go on to that, we do have a question here. How did you validate that there are lots of startups in Ontario that would want equity fundraise and lots of willing investors?
Okay, that's a great question. So before we actually went in and started our business, we reached out to hundreds of companies and hundreds of different individuals who would be potential investors. And we talked to them about the funding landscape in Ontario, their opinions on it, and what they were sort of looking for. And essentially, we found that lots of great startups are looking to raise capital. And the challenge is, in Canada, there's only about 50,000 angel investors. And there's a lot of VCs, but there's not, as many VCs as Silicon Valley or anything like that. And so we end up with this situation where there's a smaller pool of capital available to these excited startups. And also Canadian investors, and especially, VC and angel investors in general, compared to the United States, were actually a little bit more risk averse. And so as a result, Canadian startups are getting funded in smaller amounts and at later stages than the equivalent in the US. If you think about what a seed round raise in the United States might be, it might be $1 to $2 million US dollars. In Canada, a seed round is much smaller than that, and your Series A is considered $1 to $2 million US dollars. So even the terminology there indicates there's a difference in Canada's willingness and availability of capital to fund startups at this phase. So from the company side, we could see, okay, if we could get more companies, more capital, that would be beneficial. From the investor side, typically and traditionally, investing in venture capital was sort of restricted to higher net worth individuals. the general public wasn't allowed to participate in deals in non-public companies generally. And we found that there was a lot of people who wish they could, start investing in this manner, and they wish they could, basically learn or try out being an angel investor. But also at the same time, we saw that there were people who were participating in Kickstarter campaigns, but wish they could do more to support the company. I know there are a bunch of companies on Kickstarter that were offering, for example, innovative products, and the products were exciting and people wanted to support the company to help make that a reality. But other than buying multiple versions of the product, there wasn't any way to support the company further or to get further involved. And so equity crowdfunding actually combines both of those two groups. It creates an opportunity where, from the support side, someone who cares about what a company is doing can get involved and put their money behind them, but they can put more money than potentially before. And also, they're actually being rewarded for that support, and they're joining the journey as an investor. While at the same time, from a more financial investing perspective, individuals who wanted to get involved and get access to some of these exciting higher growth potential deals, like investing in startups, they weren't able to access that traditionally. So equity crowdfunding gives them access, so they can directly invest in the startups and learn how to be an angel investor and get more involved. So we saw interest on both sides. And we also, on top of that, we saw international interest from markets that have a sort of similar, but not the same, but similar approach and culture as Canada. So the United States and the UK, for example, both really enjoying and excited about equity crowdfunding, and Canada just a little bit behind on that. But we definitely see a lot of potential there. I hope that answers your question.
I think it does, and I'm going to. There's another question here. I'm just going to make it a little bit more generic. Is how are you similar or different from your competition? They have a specific company here. I don't know what that company is, but Fund Scraper. But how is Equivesto similar or different from other crowdfunding platforms?
Sure, that's a great question. So there's not actually that many crowdfunding platforms in Canada. In order to operate an equity crowdfunding platform in Canada, you actually have to be licensed. That's what's called an exempt market dealer. And I would highly recommend, if you're considering equity crowdfunding, any platform that you might look at, definitely make sure that they are registered. And you could do that by going to aretheyregistered.ca. And you can type in the name of either the individual or the company to see if they have registration. So that is a really great place to start initially, to make sure that they are legally allowed to work with you. In terms of how we're different from other equity crowdfunding companies in Canada, our focus is really on helping companies who have a great positive impact, who want to activate their community. So our minimum investment for the general public is only $100, which is, I believe, among the lowest. I don't know of anyone who has a lower minimum investment amount. And also, we're really focused on helping the companies through the process and having fees that are not punitive to the founders of the companies. So I know that traditionally, when companies were going out to raise capital, many individuals who act as brokers take a sizable portion of the raise, both in equity and in cash as payment, because it is a lot of work to make those connections. So we have lower pricing because we want to make sure that the equity stays in the hands of the founders. And most importantly, which I'm saying last, but I should have said at the beginning, our focus is really on helping diverse investors and diverse founders gain access to capital. Traditionally, people usually like to invest in companies that they understand, with founders who kind of mirror them, their beliefs and their interests. And so what that's resulted in a little bit is we've got a lot of sort of upper class, wealthier white people funding companies started by white people, usually white males. And so we want to help change that narrative a little bit by encouraging and giving access to diverse founders, to access to that capital. So we are really focused on making sure that our platform and our process is both equal and equitable for everyone who wants to participate.
That's great. I like the way you've approached. We've been doing this, working together for a little while, so
Yeah.
we always just help whoever's in front of us. It's the way it is, and as many people as we can. You mentioned creating video content for your page, and I've heard a lot about, video for crowdfunding is like the number one thing you need. But do we need, you also mentioned funny videos from the CEO or founder. How much video content should people be creating besides the main pitch video?
Well, that's a really great question. And it honestly really depends on your time availability and the quality of the video content that you can create. Oftentimes, entrepreneurs and founders don't necessarily have a lot of time. And so making sure you have that one really good pitch video is a really great start. If you have the opportunity to create more videos talking about other areas of your business, like a demo video or a video demonstrating some of the impact or your team or things like that, video content is always great. So if you're able to create even potentially a video for each of the different subject areas that you're going to address as part of your campaign page, that would be fantastic. But again, creating really good quality video content can sometimes be harder. I know, Craig, you're an expert at this, but we're aware that people are busy running the companies themselves. And so we want to try to help them create at least that one strong campaign sort of pitch video. And that's a great starting point.
We talk about community engagement. And I've seen a lot of people overestimate how many people in their community would invest. I see people launch startups and saying, I've got 2,000 people downloading my podcast. If only 20% of them give us $5 a month, then I'll have a income out of this.
In 5 minutes.
Yeah, and it usually my numbers, though from what I've seen, are between 1.5% and 2% are usually the people willing to open their wallet and help you. What numbers have you seen, and how do you increase that?
Yeah, I think you're on the money there with those percentages. I think 1.5% to 2% is a fair sort of starting point. In terms of work that you can do to really increase that, it comes down to community engagement and emphasizing the why and the mission. Being relatable, speaking directly to your community, being authentic, and showing them that you care about them as well and caring about your business, and you're not just after them for an investment or for a sale, is really important in sort of bridging that gap. And you can, doing things like that and really having that strong connection to the community can really make the difference between, that 1.5% to 2% engagement and a 5, 7, or even a 10% engagement. So it's really important to really connect with that sort of that niche part of your community that's really connected and excited about what you're doing, and make sure you speak their language and you treat them with respect.
A couple of things I've seen people make the mistake is they just go in, launch a campaign, and they say, hey, we're doing this, rather than potentially engaging their community ahead of time, and then also pre-vetting. Would you be interested in investing, or asking some of these preemptive questions to start getting them pre-positioned to help you?
Yeah.
Go ahead.
No, I was going to say, yeah, that's definitely important. And, we're talking about that a bit more next week. But for sure, doing that work before your campaign starts to prep the individuals in your community and get them excited and ready and aware about your campaign, but also asking those questions, finding out if they're going to be interested, and potentially making that, email list. One benefit about equity crowdfunding is that people can sort of sign up on the platform and everything before your campaign goes live. So you can create a situation where, you've got maybe 50 or 100 people who are ready, waiting to put in their $200 or $300. That's fantastic. That's going to be a great first punch. And so you can get them set up on the portal, ready to go and excited, so that boom, you hit the live button. You send an email to them saying, hey, our campaign is live. Like, we'd love for you to participate. They already know what's going on. They're ready to go. boom, they get investing. And then boom, within that first day, I keep saying boom, you've got that clear traction already out the gate, not even to mention the first week.
And traction's really important the first little while because people want to see that you're moving the needle a little bit and that there's a chance that you're going to be successful.
Exactly. With equity crowdfunding, you actually set two limits before your round starts as part of the structuring. You set a minimum limit. So that's the minimum amount of capital you need to go forward with your business goal, and a sort of maximum amount, which is your target, which is the most you're willing to sort of raise with the campaign. Until you reach the minimum amount, if the round ends without you reaching that amount, the money is actually fully refunded to all the investors with no fees or charges, no questions asked. And so it's really important to make sure that you actually meet that minimum amount. It's there to protect the investors, which is good. But even so, investors will often have that sort of psychological block where if they're not seeing that growth over time, that increase, they'll say, oh, no, it's not going to make it. I don't want to even bother. And so seeing that clear growth helps them get excited and put their money in.
Yeah, people want to be a part of the winning team, right? So they want to see,
Exactly.
oh, we want to get on board while it's going up, as it were, like if stock market.
Exactly. It's really important to make sure to sort of talk about it a little bit with some of that fear of missing out language. You've got this really exciting idea. You're making this tremendous impact on the community. You have an exciting story. Everything's really great. And the campaign's only open for a very limited amount of time. There's only a few spots. I don't want you to lie to them by any means. That's not at all what I'm suggesting. You want to frame things in a way that gets them excited to participate.
And do you suggest that people do different offers, different stretch goals, different things during an equity crowdfunding campaign versus, these are some of the strategies that people do in a standard crowdfunding campaign?
Yeah, I think it can be different between the two. Oftentimes, because you're offering equity, the way that you're approaching it and the people who are getting involved is a little bit different. I think once you reach that minimum goal, though, it really is about what you're actually using the capital for and clearly identifying that and sort of the benefit of raising that amount and tying that towards your goals. If your business does need that $1 million, even though you can do it with 500,000, but hitting that million is going to help you do this massive extra thing that's worthwhile and really proving that out in your projections, then it's worth it. But saying, oh, we want to go up to 1.2 million just because, it's going to be a little bit harder to convince people of that.
Yeah, I think it's a good idea to tie that number into the impact or the growth or what have you have so people can see that as it goes up, it has an impact and they're encouraged to share and tell other people because if they feel that, at 100,000 investment, you can do this, but at 250,000, you can do these things, they're probably more encouraged to spread the word.
Right. Well, and that's something that's also really exciting about equity crowdfunding. While, you can't go out and have paid posts talking about your deal and how it's fantastic, it's set up well to actually have people who have invested in your company to share with others that they have invested and they're excited about investing and to encourage others to participate. And so it's totally acceptable to have the crowd go out and talk to people about, that you're running a campaign and that they have participated and they invite others to participate as well.
So you mentioned posting frequently on social media.
Mm-hmm.
I heard a lot about the email list, right? So how often should you be emailing your list during your campaign? Because a lot of people just send out the one and say, well, I'm not getting much traction.
So with definitely more than one time, for sure. I think with both the list and with social media, it's really about targeting people frequently, but not bombarding them, and also making sure it's in balance with how often you're normally posting to the group. With regards to social media, we probably recommend that you do a post related to the round twice or 3 times a week, but not exclusively related to just, we're raising whatever. we have a whole strategy document that we share with companies about, okay, you're running around, what kind of posts should you be making at this time and why, and which ones do you want to do a direct sort of notice about the round versus you want to just engage them with some fun content that has a tie into the round. The same thing with an email list. If you're sending out daily emails to this email list with updates about different things or offering products, that's very different than if you only email the list once a quarter. I think when you're running a round, though, you definitely want to make sure that key milestones related to the round at a minimum are communicated to the email list. So, okay, we're going to do a round in a month. We're going to do a round in 2 weeks. We're going to start our round tomorrow. The round is live. Okay, it's week 2 of the round. We've got X number of investors and we just hit 40% funded. It's, week 6, that whole kind of thing. And most importantly of all, which I actually should have mentioned as part of my presentation, you want to make sure that regardless of whether your campaign goes well or not, you want to thank people for listening and participating. You want to look at them directly and say, thank you so much, community, for all of you who helped support, who thinking about us, who shared the message. You want to show appreciation to the community for that support they're giving you.
I think you do need to step up the messaging, but yeah, definitely show appreciation. Thank the people who support you. Thank the people who are spreading the word, the people who leave comments, the people who do the social shares, the people who invest. And when you take a step back, I'm glad you have a roadmap formula for the types of communications people need to be doing and when to communicate things, because it can get overwhelming when you're in the round, when you're meeting and doing, and so it's really good to have that. But if you think about it ahead of time, it's not that hard to think of on almost a daily email that you could send out just promoting something slightly different. Hey, we're having this impact. Here's how we had this impact in the past. Here's where we're helping today. Hey, we're thanking, it's Thursday. We're thanking our investors today. Thank you to these 10 people.
Right.
So there's always, if you think about it, always a way to engage and encourage and show momentum and, just trying to re-engage people, because the inbox is a wild west these days and you've got to stand out.
Definitely. One of the things that's actually important to know is with an equity crowdfunding campaign, there's a document that companies have to prepare, usually with support from the portal, which is essentially their legal offering document. And inside this document actually needs to include every notice or post that you're going to do about the campaign, but this document has to be posted inside the campaign on day 1. So every single post that you're going to do about your whole campaign, you have to have prepared before. And so it does take some stress off during the campaign because they're just running through your Hootsuite or whatever it is, but it puts more of the work before as part of the prep, because you have to have made 30, 40, 50 different posts all beforehand to include in this document. So that's actually something I'm going to talk about next week in terms of preparing these posts and what you need to do to sort of get ready before your campaign. But it's definitely important to mention that that needs to be done beforehand.
Yeah, that surprises me because I thought that would be more of a discussion for today. But interestingly enough, that the rules, you have to submit this stuff ahead of time. So
Yeah.
we will be talking about that next week.
Yeah, sorry to sort of bury the
No,
lead there.
not at all. So again, let's before we go, what is it we're going to be talking about next week?
So next week, we're talking about how to prepare to have a great crowdfunding round. So this week, we talked about what to do during the round to make it successful. But next week is actually about what sort of stuff can you do before even doing your round to get ready. So it includes, the marketing posts and preparing those. It includes building and activating your community before they're even thinking about crowdfunding. So great social media for actually just growing the brand awareness and preparing all the documentation, legal, financial, all that sort of stuff that you need to have before not just an equity crowdfunding campaign, but actually all of these documents would be required before even reaching out to any investor. So it's really helpful to be aware of what these documents are and to prepare them, whether you're going to do equity crowdfunding or you're going to look at some angels or potentially apply to a VC.
So thank you for taking the time today. I'm mentioning, I just put the link in the chat room again, office hours. Last time I checked, we have 2 spots this Friday. We have a few at the end of the month. If you're interested in understanding your valuation, talking to investors, getting ready for equity crowdfunding, any of the things involved, click on the link. It's a free 30-minute session with Alex and the team, so that'd be great. If people want to contact you or find out more, where do they go?
They go to equivesto.com, or you can follow us on all social medias at Equivesto. So EQUIVESTO.
And thank you again for taking the time today and educating us on everything we need to do to run a successful equity crowdfunding campaign.
Thanks, Craig. Great being here.
We'll see you again soon.
Yes.